Time is an investor's best friend, but it's never too late for a little Mad Money 101.
Class is in session! Booyah! The Mad Money Back to School Tour lives!
The Mad Money Back to School Tour is burning bright at the equator of capitalism.
Booyah, Jim, and welcome to the U. Mad Money starts now.
Most of the country may be facing sub-zero temperatures, but tonight I am bringing the heat from the gorgeous campus of the University of Miami. We are kicking off a very special back-to-school edition of Mad Money. Other people make friends? I'm just trying to make you some money. My job, not just to entertain, educate, but to put this all in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. I get it. I understand why you'd be negative on stocks right now, even after a good day, where the Dow dipped 39 points, the S&P roared 1.47%, but the Nasdaq surged 3.25%. There are a million reasons actually to feel bad about this market, especially after this big run in the last 2 days. Everything from the fact that we've moved up too far too fast, I mean crazy, insane action, particularly the Nasdaq, to the dawning realization that nothing much has really changed for the better in the last 3 days. There's still inflation, more rate hikes. There's still gridlock in Washington. There's a war in Europe. Companies are laying off people left and right. More important, until a few months ago, if you dared to go positive on stocks, you got your darn hand handed to you practically every single day. Yep, every day I run this investment club with my colleague Jeff Marks, who's stuck in New York while I get to be in beautiful pro-business Miami at the aptly named University of Miami. Yes, the U, like this, not like this, as I uncertainly learned. This is Utah. I'm at the U. Anyway, we come in each state for months and get put through the stock meat grinder because we owned a company called NVIDIA, the big semiconductor company, and the semis just got slaughtered day after day after day. We stuck with NVIDIA because the chips are the backbone of artificial intelligence. And more important, when this kind of stock bottoms, it comes back so fast you might not get a chance to get back in. Buy it at a better price. So we stuck with it and stuck with it and stuck with it. And one day, everyone's talking about this thing called ChatGPT. But the thing is, it starts on NVIDIA's platform. Game changer. When the stock was at 108 in October of last year, I was taking gas, down more than 60% from its top. Everyone laughed at me, made me sick. People in this walk on the street said, what are you still in that NVIDIA for? Check NVIDIA out today. It's doubled since then. Today, I constantly hear that if you want an AI play, you should look no further than NVIDIA. Look at it. Heck, I renamed my darn dog after it. Very confusing for the dog, unless you have meat in your hand. People thought this story was all about video games. But it's about innovation. And now NVIDIA is powering one of the most important platforms of all time. If you played through the pain last year, you now got this enormous gain. That's what you have to do. Or how about Meta Platforms, the artist formerly known as Facebook? Not that long ago, it had a horrible quarter. I was discussing actually on air about how much it hurt. It hurt my trust. It hurt me. But I said there was a path for Facebook to go forward. And the path was something called discipline. Well, last night, Mark Zuckerberg followed that path, except he called it efficiency. He changed his stripes. He's not spending like crazy anymore. He's firing people all over the place. We don't want that, but it's working. And he's spending time away from the metaverse, particularly in Reels and Instagram, even WhatsApp. And that's what I wanted. Told him so. After today's monster 23% gain, the stock's now more than doubled from its lows if you held on. If you suffered, you got the gain. If you suffered, you got the gain. That's it. Of course, ideally, you would have sold all of these a year ago. But getting them back in is so hard. Almost no one is that nimble. That's why I always tell you to buy and sell at stages. We sold some NVIDIA and Facebook at much higher levels, bought some of it back in anticipation of the eventual turnarounds. And they came. We took the pain and we gained. But now we got a whole new set of pain being thrown at us this very evening. Tonight, Amazon, Alphabet, and Apple all reported, and I think you have to accept the fact that these were not Meta. They all ran in anticipation of being like Meta, though, and that didn't happen. Now, Amazon had okay numbers, but didn't give you the giant layoffs people wanted. They hired 800,000 people. They laid off fewer than 20,000. They need bigger layoffs. But it was up 34% coming in. That's ridiculous. I wanted more efficiency, and just like Meta gave it. Didn't get it. Alphabet. Did people forget it's advertising based and advertising's weak? The stock was up $7 just today. It could give up those gains. Apple. What can I say? Own it, don't trade it. Apple had China supply problems that hurt the quarter. We knew that. It shouldn't have run into the print. What can you do? Wait until it goes to 140 and buy some back. I wish it were better. It couldn't be. But 2 billion Apple users? Come on, that's phenomenal. And it's the milestone that they announced tonight. I like that. Funny thing about this market, though, it gives you tremendous opportunities all the time. NASDAQ up 7%, probably too hot. Time to move on. I like it cold. I like to suffer like I did in Facebook. I love to suffer like I did in NVIDIA. Not because I'm a masochist, although that is indeed debatable, but because when the company's well run, the pain often represents a great buying opportunity. Pain. Want some? Want some you just dodged? How about buying Eli Lilly? I just upgraded from a 2 to a 1 for the investing club today, meaning I buy it right here. It's got a diabetes drug that will likely get FDA approval as a weight loss treatment sometime soon. Doctors may already be prescribing it like a weight loss treatment, but it hasn't gotten the FDA official nod yet. And that tells you there's tremendous demand. You know what? If you buy Lilly here, you haven't had to suffer. It's already down. So let me give you the bottom line. When companies change their stripes, or when they're incredibly well managed, or disciplined, or efficient, or when they invent amazing products and reinvent themselves on the fly, you should stick with them. And remember, if you like a stock so much that you named your darn dog after it, don't kick it when it's down. Buy more of it. Let's take some questions. Let's go over here. We'll start with number 19.
Cramer, thank you very much for being here. My name is Ruben, and my question for you is, due to troubling valuations in public markets, do you think REITs should be pursuing privatization?
They have never done that because they tend to have a lot of debt on the books. I think it's an interesting proposal, but they love public markets because they like to sell stock and bring in more money, and they like the stock itself to be able to buy things. So I think they should hold off. I think they have to be traditional as they are. I like Federal Realty, FRT, shopping centers. Yes.
Hi, Jim. My name's David Allen. I'm from Miami, Florida. I have a question about China. Now, they recently announced an end to zero COVID, and China's both the world's largest exporter and a huge source of global demand for commodities. If you're the Federal Reserve right now trying to fight inflation, is China reopening good or bad news overall?
It's real bad. It's a great question. I know everyone's trying to cheer that China starts spending more money. I know they'd certainly wish it if it were Apple. It's a commodity inflation-based spur that will be an issue. And I think you're really right to worry about it. I think people are whistling past the graveyard if that market comes back. And the way to watch it, by the way, is watch oil. Because oil hasn't gotten anything since they reopened. As long as that stays down, we're going to be okay. But if that starts flying, we're going to be in trouble. And the Fed's going to have to do maybe more than 2 rate hikes. Great question.
Thank you.
Here we go.
Hi, Jim. My name's Francesca DeMisa, and I'm from Boca Raton, Florida. Before I ask my question, I wanted to tell you how much this show means to me. My father died of pancreatic cancer when I was 8 years old, and this show is like one of the few memories I have of him is watching it with him. So I'm very thankful to meet you and be here today.
And I am thankful for you sharing that story of real life. And I'm glad you got to spend the time with your dad. I had similar experience with my mom with kidney cancer. It just goes, you know, and you got that precious time, and I'm glad that we could be a part of it. So thank you very much.
Yes, and I'm actually a pre-med major. I'm studying to be a neurologist, and so as someone that is not going to school to study investments, what are some ways that I can learn about the stock market and how to invest? And then my second question is, what stocks do you suggest to build generational wealth that I can buy as a college student?
Okay, these are fabulous questions, and I think what you have to do when you're a neurologist, you're studying, so you got to get firsthand experience. I'm very close to my neurologist, Dr. Newman, and he suggested I have migraine problem. I'm look, it's I'm the chief spokesman for the American Migraine Foundation, so I'm not revealing something here. But Nurtec is made by Biohaven. And I pushed it and pushed it and pushed it because I take a Nurtec when I get my migraine, and it's away in 10 to 15 minutes. You have to look at what you do and think who is doing remarkable things. And you know how hard the brain is. But if you find something that can actually affect the brain in a positive way, because you know we're mapping the brain now. That's your stock, and it'll be perfect. And I like you. I mean, what can
Thank you so much.
You know, you're why I do this show. I mean, my dad and I talked. My dad and I talked after every show. And he would say, you call it 701, he goes, Jimmy, that was the best show ever. Every day for 12 years. When companies change their stripes, you should change too. You got to stick with them. Coming up on Mad Money, takes Miami. A few members of the Student Managed Investment Fund here at the Miami Herbert Business School are going to pitch yours truly on their top stock picks right now. I promise to not go easy on them. You know me. Then my youthful audience got me thinking, what should young investors be buying right now? I'm listing 3 smart picks for those with a longer-term horizon. And a Miami-based CEO who's got an inspiring story about his family came penniless from Cuba. And they became owners of one of the largest Hispanic-founded infrastructure companies in North America. So stick with Cramer!
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.